Hello traders and welcome to another video review. Today is Tuesday, March 18th, 2025. Let's take a look. What do we have in the economic calendar for today? First data that are medium important are from Germany. We got the economic sentiment and current conditions data from Germany scheduled for release at 11 o'clock together with the Eurozone trade balance and Eurozone economic sentiment. As you can see, economic sentiment in the euro is expected to improve dramatically from 24 points to 43 points, and the German economic sentiment is supposed to be improved as well. So very interesting data ahead of us. And then we go to the US session. We got building permits data scheduled for release at 1:30 together with the housing starts and import price index. At the same time, we got data from Canada, core CPI and CPI data are expected here at 15 past 2 o'clock. We got industrial productions from the US scheduled for release. Then at 3 o'clock we got global daily trade price index from New Zealand. And then we got 20-year bond action at 6 o'clock. At 6:15 Atlanta Fed GDP now as usual. At 9:30 there's API weekly crude oil stock data scheduled for release. And at the end of the day, quarter to 11, we got current account from the New Zealand. So the US session is quite more busier than the London session. Nevertheless, everyone is waiting for the economic sentiment and current conditions data from the Germany and Euro zone. So without any further ado, let's just jump to the technical part of this review and see what is going on the euro dollar. So the euro dollar for our chart is showing us a nice bounce. The bounce is now around the level of 1.0955, so it's testing the technical resistance ahead of the Eurozone and German data release. So quite kind of a very interesting situation as the wave 3 is being unfolded. And the wave 3, when I refer to the wave 3, I mean of course this big wave 3 to the upside. As you know, we haven't finished this wave 3 to the upside just yet. We can do some kind of a projection here if we speak about the wave 3. So let's say if we measure wave 1 and we do the projection from the bottom of the wave 2, let's say it's something like this. So 1.16 was done, 2.61 is located at 1.1122. So that's the first target for the wave 3, and there is nothing wrong with the wave 3 going as high as the technical target, not the Fibonacci projected target, but the technical target of 1.1214, which is of course the swing high, the previous swing high from the September 2024. But if we manage to make some kind of a projection, some kind of a basic projection, then 2.61 really good target for the wave 3 for now. So that's the euro dollar. What is then going on the British pound? So the British pound is going up as well, right? So let's just take a look at for our time frame chart. There you go. It looks like the British pound jumped from the level of 50 after the bearish divergence was resolved. But as you can see, the bearish divergence wasn't actually a problem for the bulls. They still want to get higher. They still want to move higher, and then just did it high of the day, 1.3003. So that's the level for today. Yesterday's high was violated, and the weekly high is violated again. So this is the situation on the British pound. Let's see where is the next target on a daily time frame chart. Well, it looks like the next target might be located at the level of 1.3046. This is the previous local swing high, and the ultimate one is obviously the high from the September 2024, which is located at 1.3433. So we will mark it with a thick red line. There you go. This is the target for the bulls, and there is nothing wrong with that. So on a daily time frame chart, the market looks quite bullish. We are out of the channel. We are getting towards the 1.34 technical resistance. Outlook remains bullish. Let's take a look at the US dollar to the Canadian dollar. Daily time frame chart is showing us that this market is locked inside of this this zone here between 1.4540 and 1. Let's say 42.39. So that's the situation. And what do we have on the lower time frame? The first thing is we are below the 100 periods moving average. Momentum is negative. We are narrowing our movement down towards the level of 1.4239. So we can see clearly that this is the target for the bears. If we apply some trend line like this, that's not accurate, but let me see, maybe something like that might be quite good. So this is weak trend line, so there is no need to worry too much about it. But as you can see, it makes the breakout below the technical support located at 1.4239 even more difficult, right? So the outlook for the US dollar to the Canadian dollar range trading, possible some sort of the possible, let's say, kind of triangles being developed right now on this market. Maybe, just maybe, we don't know that yet. So it's very good to stay calm and see what is going on right now on the other markets as well. So that's the US dollar to the Canadian dollar. Let's take a look at the SP 500. The S&P 500 bounced from the level of 5,500, but it's still far away from the yearly high located above the 6,137 level, even 36.37. Yes, there you go. So we reversed a little bit, we pulled back a little bit, we made it into the bullish territory, but so far it still looks very, very bearish to me. We are below the crucial technical levels, so the outlook after the bounce remains bearish. Last but not least is, of course, the Bitcoin. Any change on the Bitcoin? No change on the Bitcoin as well. The Bitcoin market is still hovering around the technical resistance at 84,600, occasionally testing the 100 periods moving average, but it keeps getting rejected as it oscillates around the level of 50 on the RSI. So the outlook remains sideways, and the Bitcoin is clearly waiting for some sort of the fundamental trigger to spark this kind of a nice trending movement, right? So we got this supply zone to the upside located here. We all know very, very well this zone, and from the downside we got the demand zone located even below the level of 70,000, 69. There is a 69,000, 74,000, so that's a $5,000 demand zone, key demand zone in the long term, and only breakout below this demand zone would extend the drop of the Bitcoin even lower. For now, we just oscillating up and down, very limited volatility, narrow zone. Let's see how this will resolve in the future, because right now the outlook for the Bitcoin is sideways. Nothing changes here until the market decides whether it wants to continue the downtrend or reverse even higher and try to break above the trend line, above the supply zone, and so on. Alright, that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.